Good evening, you're watching The Big Question. I'm Sanjana. Now, as you're probably aware, we've been reporting this last week about the government's proposed GST 2.0 structure. Now, this one promises to simplify slabs and cut costs across sectors. But one of the biggest potential winners, you and me, the policyholders. Because health and life insurance premiums, currently taxed at 18%, could soon be fully exempt. Now, on the surface, that looks like a 15% drop in what you pay for protection. But here's the catch. If insurers lose their input tax credit, they may pass on hidden costs in other way. There's another crucial question that consumers are asking, and we're asking it too this evening. If the exemption, say, starts October 1st, will it apply to only new policies or also to renewals? For term and health insurance, which are renewed every year, the renewal date will decide the benefit. So that could mean real savings for millions already insured. So this evening we ask, GST exemption on insurance, true relief for families or a hidden burden for the future? To discuss this, I'm joined by Najib Shah, former CBIC chairman, Narendra Bharindwal, president of the Insurance Brokers Association, and Kanan Behl, founder of FinGrowth Media. Thanks so much for joining me. Welcome to NDTV Profit. Let's start with what everyone watching actually wants to know, including myself, whether premiums will actually come down and who benefits first. Kanan, as a consumer finance expert, do you see this translating into immediate savings for families, especially since renewal dates are deciding eligibility?
So, thanks, Anjana, for having me. First of all, to answer your question, will this lead to savings in the hands of consumers? So, right now, there's not much clarity as far as the rates are concerned, how they will be shaping. But there's one critical thing that we need to understand, that is the inverted tax duty rate structure, which you already mentioned.
Correct.
There's this, if you look at the tweet from the Ministry of Finance, there's one reform that is being talked about, which is, not being talked about on the internet at all. They are saying that the reforms will correct inverted duty structures to cut input tax credit accumulation and boost domestic value addition. So we can really hope that this problem gets solved of the inverted tax rate duty structure, which will help eventually the insurance companies in passing on the benefits of the reduced rate to the consumers.
All right. Narendra ji, from the industry side, is there clarity yet on whether the exemption applies only to new policies or renewals too? What are you hearing?
Thank you, Sanjana, for having me today. See, any government reform that is initiated, it is generally prospective in nature, not retroactive in nature. So assuming hypothetically the Honorable Prime Minister on his Independence Day message and speech had said that there's going to be Diwali bonanza. So we are hoping it's going to be prospective, and from the data, assuming that from 1st November it's going to be implemented. So all new policies that policyholders are going to buy and all renewals post 1st November, all policyholders will get this benefit of reduced GST, reduced or zero GST, whatever it is going to be.
All right.
Coming to input tax credit, so we need to look at holistically. See, the IRDA has got a 30% expense of management regime for insurance companies in place. So if an insurance company is collecting 100 rupees in premium in a year, they can spend 30 rupees on all their expenses. The remaining money goes into the loss reserves for paying claims and goes into investment income for getting investment incomes. So these two things are there. So I don't think that for every rupee of GST collected by insurance companies, 100% input tax credit is availed by them. This is a significant portion which goes as payment of GST to the government of India. So this is going to have, we have to look at this from standalone health insurance companies' point of view and general insurance companies' point of view. Standalone health insurance companies, their revenue is pure health insurance premium. So, of course, if assuming government makes zero GST on health insurance, it will impact them. So whatever input they were taking, that is going to marginally increase the premium for the policyholders. We believe still, after this, policyholder will get at least 12 to 14% reduction in price, because the 18% GST will straight away go away. And for general insurance companies, since they have got a significant book of non-health premium on which they collect GST, they can get the input tax credit over there, and their I don't think the impact of input tax credit is going to be major if they are not getting input tax credit on health insurance premiums.
All right. Okay. Very well explained. And I'm actually going to prod you a little bit more. But before that, I'm going to get a quick word in from Najib sir. You know, from a policy making lens, do you think that we potentially need a little more clarity? And I'm sure that we'll get that once there's a formal announcement. But just to avoid any kind of misleading expectations.
Thank you. The excitement which has been caused by the Prime Minister's announcement across the trade and industry is phenomenal. And mind you, this is a proposal which has gone through to the GOM, and the GOM from today's feedback one gets has recommended to the GST Council. Now, obviously, there's going to be a lot more debate and discussion in the GST Council. And from the state's perspective, there'll be serious concerns about revenue. They would like to be assured by the center, which I'm sure the GOM has had occasion to look at. They will need to be assured by the center that revenue will not be seriously impacted because of these reductions proposed. Having said that, there's no doubt that these recommendations of the Prime Minister and the GST Council are very, very welcome. This is something which the industry was asking for it. And now that it has come, I think we should just be a little more patient for the GST Council meetings, which will happen very soon, I'm told. And thereafter, it goes to the center for the necessary formulations, which is when we will get to know the finer details. And in all these matters, the devil always lies in the details.
Okay. So I think the consumers, so what I'm understanding is that the consumers may cheer, but like all of you are saying the same thing, that the fine print obviously matters. So I want to now turn to the insurers themselves. The technical worry is that without this input tax credit, insurers are facing new costs that could cancel out some of the consumer benefit. Narendra, how big a dent will this ITC loss, if it happens, create for insurers? Will they be forced to hike base premiums later?
See, generally, insurance companies, when they arrive at the underwriting price for health insurance or the premium, they factor in, to a certain extent, the input tax credit that they are receiving. So now if, the hypothesis is that 0% GST on health insurance. So for, as I said, for standalone health insurance companies, yes, it's going to impact because there'll be no ITC available. But we have to see that all premiums collected by insurance companies don't go in expenses. There's a cap of 30% of EOM by the regulator. So only 30% of the premium earned can go towards management expenses and other costs on acquisition of business and everything. The remaining 70% is for loss reserve, payment of claims, investment and getting investment income so that they can honor the future claims and everything. So for standalone health insurance companies, I believe there is going to be between 4 to 5% cost that they will transfer to the policyholder in due course. Immediately, the day this is announced, assuming that 1st November is going to be the date of implementation, all policyholders, whether new or renewing, will get this 18% reduction. Insurance companies will go back to their drawing boards and understand what's the impact on the ITC and then calibrate their premium pricing, which will come into effect hopefully in the next financial year and not in the current financial year.
Okay, all right. So then, Najib sir, in your view, does the council then, or even, those that are creating and actually raising this policy, do we risk creating distortions in the market by going for a 0 instead of a lower slab like a 5%?
Look, the industry always wanted lesser slabs, lesser rates, and now that you've got it, or apparently you seem to be getting it, other concerns
we're poking holes in it. Okay.
Yeah, absolutely. And mind you, the challenge which another friend had mentioned earlier in the program of input tax credit is precisely this. An ideal situation would be when you have lesser slabs for all inputs which go in a final service or goods, which inputs will be used to discharge a liability, and you will have to pay by cash only a small portion, having exhausted all your credit which has gone in the various inputs. Now that's an ideal situation. And as a former tax administrator, I can tell you is extremely challenging. What is an input for one may be the final product for another. So trying to factor all inputs which go in a final product and trying to ensure that there's a smooth, seamless flow of credit is very challenging. And any such proposed reduction, as we are hearing, of 18 to 0 will have consequences on the accumulation of credit because there would be multiple services or inputs which have gone, on which now they'll not be able to utilize it for any discharge of final liability because there's no liability. So that is always going to be a challenge. But I think, look, we have got what we always wanted. And again, as a former tax administrator, I can tell you, we wanted to have such a reduction in slabs. But when the GST itself was being formulated, obviously the revenue concerns were far too serious for us to look at this sort of collapsing of slabs. It has happened now. We should welcome it and wait for the GST Council and further developments.
Absolutely. I think everybody is keeping their eyes and ears peeled. But Kannan, could this affect efficiency in the system? I think that's also something that Najib sir rightly raised, and it's bound to happen, right? When you announce something new, there is going to be the teething issues. There is also going to be everybody trying, getting used to it and getting the relevant knowledge. But could this affect efficiency in the system with slower claims, reduced product innovation, if insurers then are absorbing too much of a cost?
So, like Mr. Narendra said, right, it would be largely available on the general insurers, which are offering other products than health insurance as well. So, for example, if I have to take an example of a general insurer which offers health insurance as well as, say, marine insurance or home insurance and other kind of insurance products. So we need to understand this, that eventually the input tax credit would be available to the insurer, and the cost can be passed on to the customers. While in the case of standalone health insurers, this can become a challenge for them to pass on the cost, considering the competition as well. Now, as far as inefficiency is concerned, obviously, when initially a few changes are brought in, there are hiccups in the system as to how it is changed. But I don't see, like, it is a very competitive market. I don't see anything becoming lesser competitive because of a tax rate structure in terms of claims and other innovations.
All right. Okay. Well, I would say that's reassuring. Let me just zoom out a bit and talk about the broader picture and what this says about India's tax policy and how we compare globally. And Najib sir is nodding because I'm going to raise the same issue, because most countries don't go to zero. The EU, South Africa, I believe, Mexico, all levy between a 5 and 20% on insurance. So should India really take that exemption route? Najib sir, as somebody who shaped tax policy, then do you see this as a bold move for inclusion, or what is the risk with something like this?
Look, it's obviously a very, very bold move. I don't think anybody anticipated such an announcement.
Right.
We all thought there'll be some reduction in rates and a reduction in slab, but not such a dramatic announcement. So yes, it is a very, very bold move. You kept mentioning costs. Let me just say it is not so much of cost as much as lesser profits. If you have to absorb a little bit of your credit which cannot be passed on. I think the industry kept asking for an exemption right through, and correct me if I'm wrong, my other two friends from the industry, you kept asking for exemption and stating that health is a very critical factor, which is a very critical aspect of every single individual and family. So health insurance, everybody felt, should not be levied to any such GST. And, as a general policy in tax administration, every exemption distorts the flow of credit. Because what happens if there's an exemption? It means that whatever credit has been accumulated till that point of exemption gets accumulated. It cannot be utilized. So again, from a tax policy perspective, all exemptions are bad because they distort the entire flow of credit across the value chain. Because remember, GST is a tax on every value increase which has taken place along the chain. So I think we are jumping the gun. We need to be a little more patient because there is so many unknown factors here. We do not know how the GST Council will look at it. It may say that, look, don't bring 18 to 0, bring it to 5. I don't know. I think we just need to be a little more patient.
All right. And I think that is useful because it will definitely serve us to just wait and watch because the formal announcement is around the corner. Narendra, will a GST exemption truly deepen insurance penetration, or is there a potential of it backfiring if base prices creep up again?
No, certainly this GST reduction is going to enable insurance penetration. There's no doubt about that. Specifically, if you would see the senior citizen segment, because of this GST component, many senior citizens decided not to take insurance because it became very expensive for them. So from our association, it has been constantly asked in the past that reduce GST on health insurance and if possible, at least exempt GST for senior citizens. Because that will be a great service for the senior citizens because they can plan their insurances, health insurances appropriately and take increased cover for them because that's the time when they need increased cover for themselves. So this reduction in our waiver of GST, we strongly believe is going to make it more affordable and penetration is going to increase. The need of the hour is that all the industry partners create proper awareness and take it to the policyholders.
So if I were to ask you, what is that line of awareness that you would like to create, and you can use this evening's program to say exactly that. If you had to answer a couple of questions that most policyholders or potential policyholders had in mind with regards to renewal, new policies, about existing policies, what would you say? What would be your 2 to 3 key points that you'd like to share?
I would urge policyholders to think about insurance as risk capital because the moment of truth of insurance, nobody knows. This is all in the realm of the future. When you may fall sick or when you meet with an accident, that's the time when your policy has to respond to you. So don't consider insurance as an expense. Investment in insurance is risk capital, which will be made available to you in the hour of need. Second thing, it's important that we use our insurance policy very judiciously. There may be insurance companies and policies offering you, no room rent capping and everything. Let us use the insurance policy as though we had to fund that healthcare cost when it had to be used, because it's not that it's going to be only one-time hospitalization. You never know. We hope that you don't never get hospitalized, but it may result that you get hospitalized 2 or 3 times in a year. So use your insurance policy very judiciously. Think that's your own reserve capital or risk capital available for you, and understand the policy that you're buying in. Most important thing is insurance is a contract, right? So we have to understand what we're buying into and be aware of that. And it's equally important for all the people in the distribution and the intermediary space to ensure that we educate our customers what they're buying into so that when the moment of truth of insurance comes, there is a seamless experience and the trust increases and not decreases.
Right. So then coming back to what I was asking you, what then happens to existing policyholders with news of this coming right now?
I'm sure existing policy. So one thing that's going on within our fraternity also is that some people are thinking, let us wait to buy the health insurance after this announcement has been made. So if people are going to wait, once the Government of India announces this GST reduction or exemption, so it is going to create a slowdown in insurance buying until that announcement happens. Second thing is the policyholder immediately is going to get the benefit when the announcement happens. 18% or assuming it's 5% also. So 13% benefit is going to come. Whatever increase we're talking about will happen in the subsequent financial years. It's not going to happen. And I'm sure government and regulators are going to keep an eye on insurance companies, how they're going to look at accommodating the input tax credit and everything and pricing their products so that the policyholder are not burdened significantly. But straight away, I see the policyholder getting minimum 13 to 15% reduction from the date of announcement.
Right.
I would urge policyholders not to hold back buying insurance, waiting for the announcement. If you don't get, because you never know when the need of claim will come. So you buy your health insurance. If you don't get the exemption now, once government announces it next year, definitely you'll get this benefit.
Okay, all right. I think that's wise advice. Kanan, from a financial planning standpoint, do you think consumers will trust this reform, or are you facing any kind of confusing inquiries or any kind of questions? I'm sure you are over renewals and anything around pricing that's undermining confidence at the moment.
So absolutely, if we have to talk about renewals, if the renewals are to happen after the 1st of November and this notification notifies that any renewal that happens after this particular date, it would be applicable for the, it would be applicable for the lower rate of GST, then definitely that is going to be there, which is most likely going to be the case as well. Now, as far as financial planning standpoint is concerned, to add to what Mr. Narendra said, see, it is very important to be covered for the next 3 months as well. So, if you are planning to purchase a health insurance policy, maybe do not buy it for the 3 year period. So, typically, it is seen that some insurers, some consumers also purchase a health insurance product for the next 3 years because it helps with a reduced cost. So maybe you can avoid buying it for 3 years if you want to, but definitely stay covered at all times and do not delay your insurance because you never know what happens after 15 days, 2 months, 3 months, even if there's no waiting period applicable. So when there's no waiting period applicable, and this is what we are doing to protect ourselves from uncertainties, and uncertainties may arise in the coming 2 to 3 months as well until this notification comes through.
Absolutely, absolutely, and I think we're going to get the answers soon. But Najib sir, cognizant that you're going to tell me that we must not jump the gun, and you have actually laid out pretty clearly about what could be the immediate, but say short-term consequences of doing something like this. But from a tax policy standpoint, is it fiscally sustainable to go zero on a sector as large as insurance?
I assume the government has done its numbers before we arrived at any such recommendation. Because, as I mentioned earlier, the states will be extremely concerned, and number crunching will be critical in the GST Council as to what will be the impact. Please remember, compensation cess also is coming now to an end, and the states will now look at the numbers very closely. And the GST Council will be deliberating primarily on numbers, and the other details will follow thereafter once they're convinced that any reduction of this nature from 18 to 0, which again we are speculating, happens. And I don't see any reason why it should. You see, if the ITC is not there, I think for a minute it comes into 0. All you're talking of is ITC not being available. It should only reduce your profits. Your cost will be, the ITC is not going to be more than what was than 18%, which was the rate earlier. So please remember that ITC would have been, like mentioned earlier again, would have been around a couple of percentage points, and you still have the luxury of at least 7.8 points of 7-8 percentage, which benefit you should be passing on to the government, to the consumer. And without any loss to yourself. We don't have the anti-profiteering authority which we had when we brought in GST, precisely for this reason. We want the reductions, ultimately, we as in the government would like to see the reductions being passed on to the consumer, because the consumer has to be the beneficiary of any such reduction.
All right. Okay. And I'm afraid that we're completely out of time. So I'm just going to get in a quick response from Narendra. Do you think that there are any other regulatory or tax reforms that you believe are necessary to boost insurance penetration? This is definitely going to be that one big thing that's going to be a game changer. But anything else that, you're hoping to see?
See, on the income tax side, already government has done the 12 lakh rupee tax free. And we have got this new regime for filing where you don't need to claim any exemption deductions. But if you want to really look at increasing insurance penetration, if insurance premium paid can be a deduction in income, additional income, then probably you will see a lot of offtake of health insurance and term insurance especially. So I think, I don't know if the government will look into that because they've already bought in 12 lakh rupees as tax free, and plus the new regime of filing of income taxes in place. So whether they're going to think about giving deductions on health insurance or life insurance premium paid is a difficult task.
All right. Thank you so much to all my panelists for joining me for a very, very informative discussion this evening. Like we've all been saying, our eyes and ears keenly awaiting this big announcement and a formal one of that. So here's the bottom line: a GST exemption on health and life insurance, we could potentially put money back in the consumers' pockets, especially for families renewing their policies after October the 1st. But unless insurers are shielded from the loss of input credits, today's short-term savings could become tomorrow's higher premiums. Let's remember, insurance is about trust between families and companies and between citizens and the state. I'm Sanjana Chauhan, and this was The Big Question. Good night.